All right, well, good afternoon, everybody. My name is Seema Iyer, and I oversee the Baltimore Neighborhood Indicators Alliance at the University of Baltimore. Today is the first of 5 webinars that we're going to be doing to really dive deep into the issue briefs that our staff has been working on for the last 6 months. We also had graduate students from around the country working on these issue briefs. So thanks to everybody, thanks to our sponsors, thanks to our graduate students, thanks to our staff, and of course, thanks to our respondents who you're going to meet in a couple of minutes. So today I'm going to be talking about the second issue brief, which happens to be about housing diversity. But first, let me tell you a little bit about the Baltimore Neighborhood Indicators Alliance. We have been at this looking at community-based indicators for the last 20 years. Because we had the last 2 decades worth of information, we wanted to really figure out how we could harness this information and show neighborhood change and how they have been changing in a different way, but maybe in a pattern that we might not be evident unless we were actually tracking these kinds of indicators. So when the 2020 census data came out last August, we knew we had to try and help our city kind of comprehend the 7th decade in a row of population loss. Between 2010 and 2020, the city lost 5.7% of our population. We are now at the lowest population level from 100 years, back to 1910. No other city on the East Coast, though, lost any population at all. So Baltimore is unfortunately bucking a trend, not a great trend. Cities like Philadelphia gained 5%. So this idea that there's just general urban population loss in the United States is no longer true with the 2020 census, and especially here on the East Coast. So we wanted to try and figure out why Baltimore was this unfortunate exception. And yet, if you come to some of our neighborhoods, you can see that some neighborhoods are growing and some neighborhoods are not. So look at the scale of the growth in some of our other cities. Philadelphia posted its biggest gain in the last decade of 5.1%. Newark, New Jersey, Providence, Rhode Island, all posting, 10% or more. So like I mentioned, not all neighborhoods in the city of Baltimore experience population loss. In fact, many experience significant population gain. And for those of us that are from Baltimore, this is a sad and unfortunately robust pattern. We all know what this map looks like. The blue areas that are coming down the spine of the city are what Dr. Lawrence Brown calls the white L, and the red areas that experienced population loss are unfortunately predominantly African-American neighborhoods, today. We don't need to be talking about history. We can talk about modern day issues that have this kind of experience of racialized difference. So what we find in the 6 issue briefs, if you all dig into it even more, is that we're kind of coining the term, taking from a bunch of different thinkers in this, enduring divergence. So enduring comes from Robert Sampson, divergence is coming from Enrico Morietti. And then looking at how is it that some neighborhoods that grew in the last decade continue to grow again. And it's literally having kind of this tale of 2 cities where some literally right next door to each other have neighborhoods that are growing versus neighborhoods that are declining. And we're taking a look at the divergence theory that once a neighborhood kind of gets in motion of economic gains, social gains, financial gains, they exponentially gain because of the impact of network effects. And so the neighborhoods that are declining because they are isolated by some measure, and maybe in most cases, multiple measures: physical isolation, digital isolation, social isolation, and financial isolation. And of course, this kind of isolation is unfortunately disproportionately impacting existing neighborhoods of color. And I say existing because these are, we don't have to go back 100 years to, racialized housing policies of the past. We can look at things that are happening right now that continue this kind of divergence. So that's the purpose of the Baltimore Community Change project. We want this information to be empowering, even though it's a slightly depressing message, maybe if you just looked at that at face level. And we want the act of continuing monitoring to be an act of empowerment and learning, because that's what our communities are going to need to really change this trajectory into the next decade. So we have 6 issue briefs. We're going to be talking about issue brief number 2 with our respondents today, looking at housing diversity. So why is housing diversity so important? Well, we have approximately 50% of all properties in the city of Baltimore are occupied by renters. And some neighborhoods in Baltimore have practically no options for voucher holders. So this would be the subsidized rental market, while others are magnets for voucher holders and have more than three times citywide average. We think that looking at the data, what we really need is possibilities in every neighborhood for real homeownership, renter, or housing choice vouchers to be not necessarily evenly distributed across all neighborhoods, but to be a real possibility in all neighborhoods. And this gets to the point that there's no such thing as ideal homeownership. We had many people asking the Baltimore Neighborhood Indicators Alliance project, well, what should our homeownership rate be? It's not that there's some magic number of what that should be. It's that we find that when those numbers change very dramatically in a very short amount of time, and we've seen dramatic changes just in this decade of some neighborhoods that had very high homeownership rates kind of dipping below 50% in this one decade. And so that rapidity of change is what causes neighborhoods to really not know how to deal with the change. And the key is to have stable rates and real possibilities across all those rates over time. So the one key thing is that we found a real interrelationship between the for sale market, the rental market, and the voucher market. And the communities that saw significant increases in both the voucher market also saw an increase in the number of people that were spending too much of their income towards rent, which is a kind of an irony in and itself. And these were the same neighborhoods that experienced significant declines in the owner occupancy rates, which means that these 3 markets are completely interrelated. And we can see in this one quick chart, which is also obviously in the report, that even though the city declined in owner occupancy, declined in the percentage of people that spent too much of their income towards rent, and actually declined in the overall voucher utilization, we had the same Edmondson Village, the southeastern part of Baltimore, Morrill Park, Violetville, and Govins kind of really buck that trend. And these are neighborhoods that actually have pretty moderate rates of for sale market in terms of median sales price. So why could this be happening? And hopefully our respondents can kind of shed some light on that. But we also found that this idea of having a uniform fair market rent where the whole city is governed here with one rent level is not how it actually happens on the ground. So you can see that we have Govins, Bel Air Edison, McElderry Park, Pigtown, Washington Village, and Edmondson Village, and Greater Mondawmin really forming this ring of concentration of voucher holder utilization, even though technically you can use your voucher anywhere in the city. That's just not happening. So this is the point of this particular brief, and I hope everyone takes a look at the whole thing. And I want to turn it over to our respondents today, and thank you both very much, Casey and Charles, for being here. We're going to put their full bio in the chat, but for now, let me turn it over to Casey to give some thoughts on what he saw. Dr. Casey Dawkins is Professor of Urban Studies and Planning at the University of Maryland and Research Associate with the National Center for Smart Growth. Casey, thanks for being here.
Thank you. Thanks for inviting me to be a part of the conversation. And thanks also for producing such high quality and important portraits of neighborhood change in Baltimore. I really like the issue-oriented nature of the briefs and actually plan to use these as templates for a class assignment in the fall. So that'll be one use of these. And as I'm apt to do, I tend to focus a lot on methodology. So my initial comments pertain to that, not particularly, for the research purpose, exclusively, but also to, I think, help us understand some of these metrics and what they're telling us. And the first is the term housing diversity. And what do we mean by that? The brief really focuses on tenure, housing affordability, and voucher utilization. But to me, these indicators still don't tell us much about housing diversity, which to me means variability in housing styles and types, variability in price ranges within individual neighborhoods. And I wonder if it'd be useful to include some of those kinds of measures alongside the ones that you've already included to help sort of contextualize what housing diversity is all about. Related to that is the point that planners often assume that housing diversity leads to neighborhood, racial, and economic diversity, but that may or may not be true. In tight housing markets, for example, higher income people may occupy lower priced housing units and squeeze out lower income households. So yeah, I think it'd be useful to sort of really getting at the idea of housing diversity, to pair measures of housing unit diversity with measures of population diversity by race and income, to see if housing diversity is actually fostering residential integration by race and income. My third methods point, sort of a more minor point, but you talk about the percentage of households that spend more than 30% of their income on rent, and define that as the housing affordability index. That was a bit confusing to me sometimes in the report, and I think it may be more appropriate to define that as the rent unaffordability index, because it's sort of those paying more than 30% of their income on rent. It's sort of a minor point, but it was somewhat confusing at times. But the final sort of indicator suggestion may help us to understand one of the comments, sort of the paradox that you talked about. I'll sort of come back to that in a minute, but the indicator that I would suggest looking at is voucher lease-up rates. You know, you're looking at the number of voucher holders per 1,000 rental units. But that sort of omits households who are awarded vouchers but were unable to find apartments within a reasonable time period. You know, so an indicator that is measured as the percentage of awarded voucher holders who are able to successfully find an apartment within 60 days or so would really tell you what the barriers to finding an apartment for those who have vouchers is within individual neighborhoods. So now sort of to the more substantive comments, sort of really two I want to focus on. And the first is that the brief makes a really important point that the home ownership rate doesn't tell us much about neighborhood stability. As you pointed out, what's more important is the rate of change in owner occupancy alongside changes in vacancy rates and population. I mean, you gave the example of Midtown and Greater Charles Village, which have below average owner occupancy rates of 41, 42%, but have seen reductions in vacancy rates and increases in population. And I think that's really important, particularly from a policy standpoint. You know, that low owner occupancy does not necessarily equate with neighborhood instability. We can have, you know, stable, vibrant neighborhoods that have a large number of renters, and that's fine from a policy perspective. I think the more important thing is, are those renters stably housed, or, you know, are they able to sort of stay in the neighborhood? Or are they pushed out by rising rents or properties that are poorly maintained or something else? So I think that getting back to your other indicators, bring those kinds of measures into this could potentially be useful as well. But I want to sort of come back to the paradox that you pointed to. That you pointed to three neighborhoods that had the highest levels of voucher usage, but also had a large percentage of renters spending 30% or more of their income on rent. And I have sort of two thoughts on that finding and how we might think about it. I mean, first, it could simply mean that the demand for vouchers is high in neighborhoods where unsubsidized households have high housing cost burdens. In other words, it's not the voucher recipients that have a high housing cost burdens, it's the unsubsidized renters in those neighborhoods who have high demand for vouchers but don't get them. So it might be interesting if you could sort of break down cost burdens by voucher recipients relative to unsubsidized renters within those three neighborhoods to see how the cost burdens break down by voucher receipt. You may find that, you know, the voucher users actually have lower cost burdens in those neighborhoods. Another sort of thought related to that point is that it may be the case that the only units available for rent by voucher recipients are the ones located in areas with high fair market rents, so that voucher recipients on average are spending more than 30% of their income on rent to secure homes in expensive neighborhoods. And so this sort of goes back to the suggestion of including information on voucher lease-up rates alongside, voucher sort of concentration within individual neighborhoods. So those are sort of, two really important things that sort of stood out. But overall, I think sort of learning a bit more about housing diversity, I think would be interesting, particularly as it relates to sort of neighborhood level integration. I think would be worthwhile. But again, I just want to sort of congratulate you on producing such an important brief. And I'm really looking forward to sort of getting into a conversation about the policy implications of your findings. So I'll stop there.
Thanks so much, Casey. Those are perfect. And we have a longtime friend of the Vina Project, Charles Rutheiser from the Annie E. Casey Foundation, is Senior Associate for the Foundation's Center for Civic Sites and Community Change. Thanks, Charles, for being here.
It's a pleasure. And, the Casey Foundation has been a long time supporter of Vina, and you have, consistently year in, year out, I think, produced some incredibly important and timely data, hard empirical data about what's taking place in the city. And, that is a, fundamental starting point to be able to have an informed and effective conversation about policy change and transformation. Housing is really, is fundamental. The Casey Foundation sees housing as a basic need, and for far too many people, housing is unstable, it's unaffordable, and people need to move. And without that sort of firm rooting in community in place, it becomes challenging to thrive. Actually, I'm going to be circulating this brief and the other briefs with other members of our Baltimore Civic Site team, as well as the Center for Civic Sites and Community Change, and our colleagues in the Research, Evidence, and Evaluation and Data units, to be able to sort of talk and further inform our work going forward in Baltimore. I mean, this is, I think, a very important set of data, very troubling data, I think, for many of the reasons that you and Professor Dawkins have talked about here. One about the decline in home ownership. And to start off, I think, there has long been, I think, sort of taken as a matter of faith rather than a matter of fact, that home ownership is what stabilizes community. And I think the folk narrative around that is that if you buy into a piece of ground and, well, the bank owes it, that you have a deep sunk 30-year investment or more in your community, you're going to take a greater interest in the activities of your community and a set of vested interests. And I think one of the things that we do see and know that renters can be long-term residents of a community, even if they address this, tending to move within neighborhood boundaries. And, in some ways there, participation of renters and community associations and so forth is probably far more, an important part of their contribution to the community and the health and stability of that community and cohesiveness than the form of tenure that they have. Although I think there are ways in which home ownership is weighted unevenly, and that homeowners tend to sometimes have more of a greater voice in the affairs of community and connection with government, which is, I think, a whole nother matter. But definitely agree wholeheartedly that the real sort of troubling thing here is when we see rapidity of change in either way, in either direction, whether down or increase. We know that something really interesting and important is happening in those localities. And I think also, there's the challenge of whether or not these data themselves are self-explanatory, because I think we can take a look at a variety of things and see how they are interrelated, and it's very important here. And it shows that the home ownership and rental markets are very closely integrated and interrelated. But what is actually driving this in particular neighborhoods? What is going on in Govins, for example? What is going on in Morel Park, as opposed to other neighborhoods with similar kinds of socioeconomic profiles? Who owns the land? what is actually driving this? And I think this is where quantitative information becomes the launching port for a qualitative investigation of really being able to figure out these local dynamics of what's taking place. And I would go beyond that even further, given the fact that community statistical areas are fairly large pieces of geography themselves that are themselves internally differentiated, both socioeconomically and in some cases, especially in the case of Gobins, in terms of housing type between row houses and single family homes. And this is where I think, Professor Dawkins, comment here on housing diversity, and we really need to look at type of housing and sort of factor that in, is incredibly important, because I think in some ways the prototypical housing stock of the city of Baltimore is the row house, whether it's 8 foot wide or 10 foot wide or 12 or 14 or 2 or 3 or more stories. That is in some ways the defining feature of our landscape. But as we move out into the Northeast and Northwest and Southwest, we also see large concentrations of single family homes that over a period of time, beginning in the 1940s, were subdivided into multifamily apartment units and then have sort of ebbed and flowed back depending on the dynamics of local marketplaces. Also agree wholeheartely about the rental affordability index, and that it is really the rental unaffordability. So when the rental affordability index goes up, it's not a good thing. It is the sign that there is increasing housing cost burden amongst the renters in that particular area. But I would go even further and to think about whether or not we have the data and what would be required to sort of go beyond just the 30% housing cost burden to see how many and the percentages of extreme housing cost burden, 50% AMI. We know that once housing costs exceed 1/3 of a household's budget, becomes increasingly problematic and difficult to afford the other basic necessities of life. But once you hit, especially when you have low incomes, as most families who are extremely housing cost burden are, but once we get above 50%, which we know nationally is very prevalent among very low income families, it really becomes virtually impossible to provide adequate basic necessities of life for a household. And that they have to make, people have to make all kinds of very challenging decisions and trade-offs about what they are going to be able to sort of allocate their money for. I think the other thing too, when we take a look at where vouchers are being used and where they're not, is really important. In the case of a place like Canton, which is where I live, and given the fact that fair market rents here or market rents here are so much higher than what the fair market standard is, it's no surprise that there's limited voucher uptake. But I'm wondering, where the fair market rents, I believe this report talks about Mount Washington being one of those neighborhoods, and where we don't see the uptake of voucher usage, that there might be something here about source of income discrimination. And it raises questions for me about what is the current level of enforcement of source of income discrimination here in terms of being able to, assess how that, and I think given, the structurally racist history of the city of Baltimore, is very much in play. But if we're not, trying to assess this, we're not going to be able to get around and get ahead of it and be able to address this in terms of policy and programs. So, but I think, also, and I don't want to sort of harp on the limits of data, because in some ways this is not unique to Baltimore, but that I think the pandemic has shown that so much of the metrics that we use to assess housing and community development everywhere in the country tied to the American Community Survey is essentially backwards facing. It's focused backwards a few years. And so we're driving forward into the future, looking into the rearview mirror. But, you can make legitimate I guess, extrapolations from past patterns about where things are likely to continue. But when you have such a profoundly disturbing and unsettling event, such as the pandemic and the economic dislocation and pain that has come out of that public health crisis, I wonder what has taken place in communities around the city of Baltimore, intensifying some of these patterns that we have been seeing, particularly around housing cost burden. And when we will actually begin to see the data of where the pandemic actually starts showing up in the data sets that we, as a field, really have to rely on and are limited to. I think the U.S. Census Housing Pulse Survey was very interesting and very important to provide that real-time data, but it was not very accurate to bring it down to a citywide, much less a neighborhood level. And that survey is basically ended. The last data collection is February 7th. So we are in some ways going to be flying somewhat blind into the destabilizing circumstances that have been set in motion by the pandemic. And I don't know what can be done to be able to figure out how we can develop better real-time data sources for the rental market and the renter sector in Baltimore, as compared to, say, mortgages, where we do have that sort of more real-time data that gets updated on a more frequent basis, where we can see there is distress and turnover in the housing market. But this is, I think provides a set of really, clearly important facts to be able to inform city policy. And up until last week, I think it was a fair question to ask where housing sat within our mayor's current priorities. Because if you look at the 5 pillars that he had announced several months ago, housing was very hard to find in this. It was almost, I won't say completely absent, but maybe it was implicit or buried, but it really didn't necessarily seem that housing and housing affordability had been recognized at the municipal level as the kind of challenge that it clearly is in the city of Baltimore. And found very encouraging that there's going to be a significant amount of ARPA dollars dedicated to doing this, but it is going to be fairly focused on a set of neighborhoods and in a set of projects within neighborhoods. And I think I think it would be really interesting to see how the city's proposed investments in housing might be able to sort of address situations and conditions in some of the communities that this report has identified that are undergoing fairly destabilizing kinds of change.
Well, thanks to you both. I have just 2 things to maybe launch a conversation about. Yes, housing diversity is something that we have to talk about, both in terms of the market, housing diversity of market, and housing diversity of the stock itself. And notice the 5 neighborhoods that have this high concentration of voucher utilization are all predominantly R8 row house, R8 zoning row house neighborhoods, right? Bel Air Edison, Edmondson Village. I almost built on that backbone of the row house. Pigtown, even Govins is mostly kind of duplex row home and has some single family homes. So, the lack of diversity in the stock itself does not lend itself to diversity in the markets. But also thinking about, Charles Village that has the 40% home ownership, the neighborhood has had to compensate, has had to do something in order to accommodate the fact that they have a pretty low home ownership rate. And 20 years ago, they created the Community Benefits District, as did Midtown, which is a little bit of a surcharge to all property owners to maintain the public spaces. So there are 2 things and potential recommendations that we are suggesting to the city, that if your neighborhood has now kind of come down below 50%, the answer isn't, I don't want any renters. The answer is to accommodate for the fact that you probably have too few homeowners to deal with the public realm, and maybe think about creating a community benefits district in your neighborhood to address those issues, right? Occupancy is better than no occupancy. And to really look at those neighborhoods that have that low rate, and then also thinking about the metro area fair market rent is not helping us as a city, because in Canton, as you said, you can legitimately say, I can't accept a voucher because it's just too low of a value. And so we are suggesting that the city adopt the small area fair market rent, which means that there would be a gradient of rents, which sounds counterintuitive to some of our neighborhoods, that you actually want to reduce the rent in Bel Air Edison so that your for market sales will actually be more profitable. Right now, a rational homeowner, if they're only going to get a certain amount of return to sell, although with the pandemic, as you were saying, Charles, there's irrational cost right now in sales. But before, it used to be that you would get a pretty low return to sell, but you would get a pretty high forever rental income on a voucher holder. And so because Bel Air Edison had really suffered during the previous pandemic, not pandemic, the Great Recession, rational single homeowners, instead of selling and going underwater, turned to the voucher market. And you can see that literally happening in all 5 of these neighborhoods. And so individual homeowners are making rational decisions, but it is too profitable to rent versus selling. And that's kind of why you can see this kind of pressure. But it is also interesting that we do have these 2 neighborhoods where you could actually ask for a higher fair market rent, and we're still not seeing high uptake. Although there's much higher uptake there than there is in Canton. So it's all relative, I guess. So maybe if you want to talk about those 2 things, either one of you.
Yeah, I'll start. We can sort of keep the same order. I think, getting to the first one, I don't know about sort of necessarily tying the community benefits to the percentage of homeowners. I think that's the sort of collective obligation all neighborhoods should enjoy. But I wonder, not necessarily for just the sort of the public realm, but expanding collective forms of housing strategies more generally. I don't know the extent to which, I'm sure the city's involved in, sort of community land trusts or co-housing, those kinds of things. Because I think one of the things that's really pointed out in the paper is the need to expand opportunities for low-income affordable home ownership. And so ways of doing that sort of maintain affordability, maybe giving up some of the equity benefits of home ownership, but providing the tenure benefits, sort of the stability benefits of home ownership, could be useful. Sort of expanding that idea of community benefits to look at community land trust or land banking, which I'm sure is being used quite a bit in Baltimore. On the fair market rent sort of question, I think I think that's certainly part of it. But I also wonder, I keep thinking back to you and I worked on this regional plan for sustainable development. And I think there were some really interesting sort of neighborhood-based strategies in that report that could be used to sort of target, according to different kinds of neighborhood needs, but also doing it in a way that sort of enhances sort of regional cooperation. And I wonder, we talk about regional cooperation in Baltimore, it's usually talking about cooperation between the city and the suburbs. But I wonder if there's a way or mechanism to provide a bit more cooperation within the city in terms of accommodating fair shares of affordable housing throughout the city. Some neighborhoods that are sort of not providing as much affordable housing could take on more of their share than neighborhoods that are sort of providing the largest concentration of voucher users. So those are sort of 2 reactions and thoughts that came out of your comments.
Yeah, and certainly in a place like Canton, which historically has been very row house, but I think the real big story over the last 5 years has been this explosion in giant scale market rate multifamily, and actually that is intruding upon old industrial brownfields, refinery sites and so forth. But just to see how that is, been affecting the local market here, I think has been fascinating. But I've seen, being here for a decade, the way in which, this older generation of homeowners sold, or they died or moved on, their heirs turned it into rental. And over the last 3 or 4 years, virtually all of those properties have turned into, back into home ownership now with a very different and somewhat more diverse, and this is, more the anecdotal from observation of than it had been in the past. But I think in some ways here, one of the interesting things that one of the things that I'd be particularly interested in is to really get a sense of who are the landlords in Baltimore, because I think sometimes, that can be a, highly generalized, term here. And, pointing to some research that researchers at Hopkins had done, they found that a fairly significant share of renters, at least in the parts of Baltimore they were looking at, fell into the category of family and friends. Very small scale, landlords, and then you had those that had accumulated a multiplicity of properties, and then you have much larger corporate entities. And wondering also a bit about whether or not some of these patterns and trends we're seeing track with the increased investments by private equity firms in rental properties in Baltimore, and to sort of disaggregate and break that down to see maybe are there particular actors that are helping to drive particular kinds of trends, especially in lack of usage of refusal to accept vouchers.
Well, thank you both so much for giving us this little teaser of the issue brief. I hope everybody reads the issue brief themselves and tells us more about what they find in it. We have an entire week of webinars. A lot of what we talked about in this one is probably very relevant for our next one, which starts at 4 o'clock Eastern time, about how houses get rehabilitated and why we have so many vacancies in some of our neighborhoods. And for everybody else, please join us. We have all kinds of things going on. We have webinars. We have all of our convenings happening next week. We meet for trivia every Thursday night, and you can win t-shirts from Fearless Sports. Who doesn't want a Fearless Sport t-shirt? And stay connected with us as we move through these next set of 2 weeks about changing our neighborhoods and eliminating neighborhood disparity in the city of Baltimore. We are gonna